What are cryptocurrencies?
Hey, hey, hey.
What are NFTs?
A non-fungible token.
Time to buy Bitcoin.
Bitcoin just seems like a scam.
What's up, Bitcoin?
Hello everyone. Welcome to On the Ledger. This is your host Mol Saeed, and I'm back once again on your weekly rendezvous from Paris. Today we're talking about one of the most inspiring DeFi projects out there. One that's truly anchored in the ethos and values of crypto and decentralization. A project that doesn't have investors, a top-down hierarchy, or an official voice. It's rather a collective of contributors, builders from all over the world, working in tandem, beloved by an impressive community, and governed by a famous token called Wi-Fi. As you might have guessed it by now, we're talking about Yearn Finance, a yield layer that aims to underpin financial instruments without the needs for banks nor middlemen. That yield machine will soon be available in Ledger Live to help you grow your crypto, so we thought that this would be the perfect opportunity to dive into Yearn's story and explore its future. To do so, I'm glad to welcome Facu Amayal, Comms Manager at Yearn Finance. Hello Facu, welcome to On the Ledger. How are you feeling today?
Hello Mo, what a presentation. Thank you for inviting me. I'm excited to be here.
Super excited to talk about Yearn. We'll be joined by Iqbal Gandham, Ledger's VP for Payment and Transactions. Iqbal, welcome back on the show. How are you feeling?
I'm good, and thank you for having me back.
Yeah, it's great. First of all, congratulations to both of you on that integration. And as I said, I'm pretty excited to chat with you because Yearn truly fascinates me. So let's get going. On the Ledger, Season 2, Episode 9, Yearn and Ledger. Here we go. So let's start from the beginning. Facu, how would you explain Yearn to the folks who know nothing about it?
What a question. I will try to keep it in simple terms. Yearn is it's what we call a yield aggregator. What it does is what you do when you're farming, when you're depositing tokens in some protocol and collecting rewards, but automatically. And it does it for you and in a cheaper way, in a much cheaper way, because you are socializing the gas costs which are really high in Ethereum right now, with all the users that are in the pool. So that's what we do to help our users. We're user focused.
Okay. And maybe I'll try to drill down on the different things you said there. So you're talking about yield. So technically, where does the yield come from? And comparing to other DeFi protocols, how is Yearn any different?
That's actually a good question, because a friend of mine told me last year, if you don't know where the yield comes from, you are the yield. So it's really good to know where it comes from. We deposit into protocols like, for example, Compound Finance. That it's a good example. It's a big one where you deposit tokens and you get governance tokens as rewards. But we believe that's complicated for users because, for example, you deposit DAI and you get comp, but you don't want comp. You just want your DAI, a stable coin, to grow. So that's the magic of compounding. What we do is we convert those comps into DAI. And that compounds the interest, and you get more and more interest based on that. We also have more complex strategies, but that's the base of our operation.
Iqbal, having Yearn and Ledger Live will enable Ledger users to access it in a fully secure way. But what else does it mean for Ledger users in terms of benefits?
So I think if we're going to expose the world of crypto to a wider audience, we need to keep abstracting away the complexities of investing in crypto. So by combining Ledger and Yearn, what we're doing is providing the security of Ledger and integrating it with a platform such as Yearn, which is making investing into crypto super simple. So I can take myself as an example. I simply do not have the time to go to each individual token, look at the yields, create a portfolio and saying, this is how I'm going to invest. I would much rather go to a platform like Yearn, choose one of their strategies, and they abstract away all the complexities. They do the buying of the tokens, they do everything, and all I'm looking for is a return. Ultimately, what we're doing is we're trying to make crypto and crypto investing easy, but in a secure manner.
Absolutely. And speaking of strategies, Facu, I listened to your ETHCC talk. First of all, amazing talk where you laid out how Yearn operates and implements Vault strategies. What could you tell us about vaults and strategies, and maybe kind of walk us through the implementation process?
That's a great question. Thanks about the ETHCC talk. you need to see the vaults as a piggy bank. It's a transparent piggy bank where you deposit tokens. So you put your tokens into the vault, and then we have multiple strategies that are going to pull those tokens, invest them, and collect the rewards. That's how it works. And the great thing about our vaults is that now we have multiple strategies per vault. What's good about it? It's that we diversify the risk. So you don't have all your tokens in the same place, in the same protocol. You have it in multiple places with different rewards and different risk profiles. We always are on the secure side of the things. That's why we have an extensive process to approve a strategy and to attach it to one of our vaults. We rather lose a few points of yield because it takes us a little bit of time to approve a strategy, but always assure the security of the funds. So an overview of the process or how we create a strategy and how we attach it to a vault, it goes more or less like this. The strategies are created by strategists. Strategists are big brain people that are not necessarily hardcore coders. They need to understand how things connect. That's the important thing. They create an investment strategy and they have to present it to their peers because we do peer reviews. So more eyes on the code because that's what you need to assure security. Then we send it to a testing platform that they have that it's called ape.tax. That's all test. That's experimental. So they test it with real funds there for a few weeks to ensure that it's working correctly, that those vaults are going to be capped. The deposit limit is going to be really low, so we don't risk a lot of funds. Then we have a committee that is called the Safe Farming Committee that has to approve that strategy and approve the underlying protocol. So if it's a new one, we're going to do a deep investigation about who is governing that protocol, how were the audits, which are the developers there, and everything. And if that gets approved, it goes through one of our internal security auditors that is going to give it the final review. And then, and only then, it goes to our multisig to be approved. So that's our process. It takes some time, but we think it's a good one.
So Iqbal, on the Ledger side, you've been spearheading integrations and product innovations that facilitate DeFi accessibility for Ledger users. What's your DeFi mass adoption vision like?
DeFi mass adoption. So I think if we're going to have mass adoption in DeFi, we really need to understand the security implications in this world. And I think for me, the vision is that everybody replaces their existing financial services with those available in the world. And I'm going to say CeFi and DeFi. I think the DeFi world has a lot of evolving to do. Irrespective of that, we need to ensure that we have a secure layer or a secure mechanism in the way people access this world. And I think that's what's missing. And I think that's what Ledger provides. And I don't want this to sound like a sales pitch for Ledger. But I think if we have a look at the Web 2.0 world, to access Web 2.0, we had hardware and software. We had a laptop and a web browser. We had a mobile phone and the App Store. We need to combine hardware, could be a Ledger hardware wallet, with that of software. So for me, my vision of mass adoption in DeFi is let's replace the financial system. Whatever we do with money today in the traditional world, let's replace that with the world of DeFi and DeFi applications, whether it's investing, for example, with the likes of Yearn Finance, but combine that with a secure layer. That would be my vision.
What do you think, Facu? What's your DeFi mass adoption vision?
That's a tricky question. A month in DeFi is like a year in real life. That's what we always say. I agree with Iqbal that it has to be a security-first approach, first of all. And I think that we need to improve UI and UX for users because right now DeFi is a small world. We are pretty much all nerds who are using DeFi because you need some kind of technical knowledge. And I think we are all working towards including more people in it. And in the end, in a far future, I see DeFi as a backend. not as a front end to the users. Because all in all, and this is not related to Yearn Finance, it's a general thing. It's we have websites that have the forgot your password link. So we're going to need that because some people don't want to be the owners of their keys. And that's fine. That's totally fine. But what I love is that we have the option. If you want to be the owner of your keys, you can. And right now with traditional finance system, you cannot do it. So having the option is really important, but also giving the opportunity of other users who are not that keen on having their keys or having that massive responsibility to have an option to operate in the DeFi world. So that's how I see the future.
Okay. So let me move on to another topic. It's kind of impossible to talk about Yearn without mentioning the way it's governed and its famous fair launch. So to recap, Andre Cronje, Yearn's creator, bootstrapped Yearn without even having to write the white paper, if I'm not mistaken.
Yeah.
Then gave away the control for free by issuing a number of governance token called Wi-Fi. Is that how you pronounce it? Because I've been hearing Wi-Fi, Wi-Fi, but I've always been saying Wi-Fi. So I hope that's okay. So Wi-Fi didn't have market value, meaning that you couldn't buy them off the market and had to basically earn them through participation, and that's absolutely fascinating. Maybe that's why the why earn, the Yearn. But anyway, I'm just analyzing the whole thing. So people are, some people are in it for the money, others are in it for the tech. You guys are clearly in it for the values. But the question everyone might be asking themselves is, how is Yearn governed?
That's a great explanation. Andre always said that he did it because he was lazy. He's a great prototyper and he didn't want to maintain Yearn. So that's why he did the fair launch. People laugh at it, but it's quite a cool concept. But sending everything to governance, like we call it Wi-Fi. It's just not to say Wi-Fi, like the wireless network. Mm-hmm. So giving it to the Wi-Fi holders would make the whole protocol super slow because you have to send it to governance, wait for some discussion to happen, then send it to a formal on-chain voting. So a few months ago, in April, we came up with a new way of doing it. It's a constrained delegation. So at Yearn, what we do is we have what we call white teams. Each white team has some powers, some things they can do. For example, white people has the power to pay people grants for the contributions. White budget has the power to set a budget for a team or for sponsorship to events or travel expenses, whatever. And the Wi-Fi holders, they retain the power to change the powers of the teams. So that's the cool thing. They delegate some of their responsibilities to smaller teams so we can act fast. Because today is really, really important to act fast. And I think that's also some innovative things that we're doing at Yearn. Is we're always experimenting with human interaction, how we organize the whole organization without bosses and in an horizontal way. So that's a cool thing to look at it.
That's fascinating. So it's basically a number of substructures and teams that kind of work together and interact based on common incentives. And your team is Y-Brain. Could you maybe speak more to that? What is Y-Brain?
Yeah, it's actually that. It's like a multi-DAO, and we call it Y-Brain because it's the strategists. The strategists are the ones that write the strategies, but not only write them, they maintain them. Because it's not only about creating an investment strategy. DeFi is a living thing. So protocols, stuff happens to protocols. You need to be checking, to be monitoring. We built a whole alerting system. It's like sometimes from the outside, it seems like you write a strategy and then you go and enjoy mojitos on the beach. It's not quite like it. And well, our team has the power to create new strategies, has the power to send them to the multisig, but they cannot approve a strategy to be attached to a vault. And that's very important because the multisig has that power. So being divided in two, it gives some cross-control, cross-check about that the strategy is not a malicious one, that the strategy is going to function correctly. We got to present the process that we followed for that strategy. So it's cross-checked. It's not a free-for-all.
That's pretty interesting. Iqbal, self-custody is at the core of the ethos of this ecosystem. But to Facu's earlier point, it's fair to say that it's intimidating to newcomers and does entail some risks if you're not pretty educated about, how to manage your keys or your recovery phrase. So most people still use custodians to hold their crypto assets. How do you see that evolving?
Well, I think if you look back at history, there hasn't been a single instance of innovation which hasn't been intimidating. Sitting in the first motor car for people who were sitting on horses was very intimidating. So I don't see that necessarily as an issue. That's more of an evolution that we need to take. But what we have today, and I think this is what we as individuals, we as people need to understand, is for the first time, we can actually take control of our money. And that's really powerful, because the most valuable vote or the most powerful vote we have as humans is the pound or the euro or the dollar in our pocket. By taking control of that, we can take control of a lot of the issues that we're facing today as a society. And I don't want to go into a philosophical discussion, but I think it's very important to highlight that. Yes, it's intimidating. Yes, this is a stepping stone. And yes, today, some people will go down the self-custody route. They're confident in tackling self-custody and having ownership, but not everyone. But we now have the ability to do that. We need to make it easier as an industry. We need to work out mechanisms by where we can ensure the seed, or let's call it replace the seed in various different guises and mechanisms. But individuals no longer can say, well, we can't get this done, or, the governments aren't listening to us, or nobody's listening to us. You have the power to make the government listen to us. You want to change the climate today, you can go into a bank and you can tell all the politicians that tomorrow morning we're closing out our bank accounts and we're moving all our money into crypto. And I'm not saying, Bitcoin, Ether, and all of these other tokens, you can move it into a stable coin. The moment 100,000 people do that, I guarantee it, the government will listen for whatever topic. So for me, yes, it's intimidating, but you now have a solution. It's down to the individual to say, hey, I want to utilize this solution. But the industry also needs to make the solution slightly better. Recovery of seed and insurance, et cetera, which, the industry is working on.
Yeah, that's fascinating. And, innovation has never been driven by the incumbents anyway. So Facu, scalability is definitely key for the development of DeFi. Yearn has increased its capital efficiency in the past year by merging with Cream, Acropolis, SushiSwap, Cover. I might have missed some. First of all, I've heard that these kind of mergers happened without any kind of legal paperwork. It was just like a tech merge. Is that true? Because that's truly fascinating if it's the case.
Yeah, indeed. There was no paperwork because we are all projects. We're all DAOs. We don't have any paperwork, any incorporation in any place. And usually when someone asks me about Yearn and all these protocols, I say, yeah, the technology is really cool. That's why we merged the technology and we started to collaborate more tightly. But what's awesome is the experiment about interactions. When everyone saw merger, they said, okay, where's the M&A? Where are the documents? Which company is buying which? And we said, no, we're just collaborating. We call it merger because we don't have a better word.
So what are the next milestones now that you've increased, in a significant way, your capital efficiency? What are like the future milestones for Yearn?
Well, now we are in a moment where there are a lot of side chains and scalability solutions. And I believe in a future, a multi-chain future, where each chain is going to be used for a use case or for multiple use cases. So the next milestone is multi-chain. We've launched in Phantom, but we're going to continue launching in chains that make sense and that will allow our users to invest cheaper, but always in a safe way. That's why we really cherry pick the chains we're going to.
Okay. And can you get any kind of sneak peeks? Is it more like layer 1s, layer 2s? It's okay if you can't say anything. But trying my luck there.
Fine. It's the alpha. No, it's okay. We launched in Phantom and we're actually looking at other solutions. We don't care if it's an L2 or a sidechain. Both solutions have their pros and their cons. So we're looking at both L2s and sidechains, but we haven't decided on any other chain right now.
Okay, fair enough. Iqbal, regarding DeFi, Ledger Live has now integrated with Paraswap, Lido, Zerion, and soon 1inch and Compound. What are the future kind of Ledger Live developments that you're most looking forward to?
So I was going to say that's an easy question in some aspects to address. The idea about the Ledger ecosystem is to help replace the traditional financial system. So if you look at the traditional financial system, there's about 6 or 7 things you do with money. You'll trade it, you'll invest it, you'll save it to earn some kind of interest, you'll borrow money, you may send it to somebody, or you may spend it. So those 6 financial verticals, in an ideal world, I would like to replace all of those with the Ledger ecosystem, and that includes the Nano, and that includes Ledger Live. So we're working with various partners who replace those. So if you look at Yearn, ticks the box or partly ticks the box when it comes to investing. We have trading applications on our, Paraswap, is a trading application. We will look at various places where you can earn. So staking is really important to us. And slowly we will fill all of those 6 verticals with the leading players within that space. And the premise behind that is, I come back to the point that I made earlier. If you're going to access the world of Web 3.0, you need Web 3.0 solutions. So you need hardware and you need software. So you need a Nano combined with Ledger Live, just as you had a laptop combined with, say, Internet Explorer. And that's the holy grail from where I'm sitting right now.
Interesting. Most definitely looking forward to that. Facu, more than a year ago, Andre distanced himself completely from Yearn. He published a rant on Medium titled "Building in DeFi Sucks." Why do you think that is, and how can we change that in the future?
That's a difficult one. If you ask me if building in DeFi sucks, sometimes it does.
Why?
I come from the open source software community. I am really used to build with open source software, and Yearn is like open source but with money. And if you check any open source product, you are going to see the same behavior users have in DeFi with open source protocols. They are going to criticize, they are going to ask for immediate support, even if they are not paying anything. They're going to ask for features that they want. There's always going to be people that don't understand the open source philosophy and how an open source project works. Like how they pay the bills, because they have to pay the bills. When you have a person all day working full time, that person has to eat like 3 times a day to be alive. So that's why Andre rant about building DeFi sucks, but it also like to get things out. Sorry, and sometimes it does, but when it doesn't suck, it's super exciting because you're building things that are going to replace the traditional financial system, as Iqbal said. So that's super exciting, and you're making an actual change, a practical change. It's not that you're doing a plan that someone will implement in the following 35 years. You're doing something that it's going to get implemented in the following month or 2, for example, and that is going to change someone's life. And I've seen crypto change people's lives, not only in the third world countries or Philippines that everyone said, but Europe, the US, or whatever. So I think when it doesn't suck, it's really awesome.
Yeah, that's a good way to put it. And I think we've all seen how crypto changes people's lives. And that's what's most exciting about it. So that's a question to both of you, actually. When you think about the future of DeFi, if you had to choose one thing that excites you the most and one thing that worries you the most, what would you choose? Iqbal, you can start.
I think I have the same answer to both the questions. So what excites me is what worries me. And I'm genuinely looking forward to, I'm going to use the term battle. And I'm not sure if that's slightly harsh, but the battle, the challenge between the regulators and the world of DeFi and DAOs. I'm fascinated by how DAOs are going to work and how they're going to scale and how, businesses are going to be run by, let's call it code. Well, let's not call it code. It is code. And how the regulators are going to attempt to control that. For me, that's the most exciting part in the world of DeFi, because that's fundamentally changing the fabric of how we operate businesses and operate companies. And that's what, growth of any country is actually built on, is the development of corporations. So that is changing the fabric of the way we do business and how the GDP of countries is actually affected. And that to me is it's a fascinating thing to sit on the outside. Well, not on the outside, kind of almost on the outside, and sitting there watching the regulators thinking, what are we going to do about this? And the DeFi community saying, well, see what you're going to do, and we're going to change it again. And so that to me is where I'm most excited.
Absolutely. What about you, Facu?
Actually, Iqbal kind of stole my answer. I couldn't agree more. Well, for me, it's the same thing. Yeah, for me it's mass adoption, but it's a double-edged sword. Like, I'm excited about mass adoption and all the new challenges that are going to come with it, that users are going to be able to use DeFi and replace the traditional financial system. That's the good part. And I don't want to say the bad part, but the more challenging part is going to be the regulations. So how we're going to serve the regulations, and how the regulators are going to be able to regulate all this craziness. Because right now DAOs are an amazing organization type that we have in DeFi, and I think that's the future. So that's pretty much the same. So we are like Iqbal.
That's great. Where do you see the regulation starting from? Do you see, like, we've already seen China, and I think China is like a different topic here, but where do you see Europe or the States being kind of the first movers there, or what's your vision with regards to that?
There are regulations being cooked in Europe and in the US. I think that right now the US is moving faster forward with some kind of regulation. But I think that we need to think, or the regulators need to think, the regulations. Sorry for repeating the regulation all the time, but they need to think it better, because it's not a simple thing to regulate. Because you have people, you have a code, there are a lot of liabilities that are not, or responsibilities that are not very clear. So it's uncertain. And I think that needs to change the uncertainty.
It's also a question of timing, because if you regulate too early, then you kill innovation. If you regulate too late, it becomes like chaos. Iqbal, you live in the UK, but you're also, pretty much involved with regulations here in France. What can you tell us about that?
So I don't think it's which country is going to regulate first. I think there are certain countries which everybody else watches because they value their regulatory framework. So, the UK's regulatory framework has been pretty solid over the past, 50, 60 years, if not longer. So there are countries which will sit and watch to see what the UK does, what does Switzerland do, what does the US do, and then they will kind of retrofit that into their models. I think the issue that we have here is, one, the regulator has a complete lack of understanding of what crypto is, and that's not because it's who they are. It's just the industry is moving so fast. So somehow we need to address that challenge. And the second is, I genuinely feel we need to start with a blank sheet of paper. We cannot retrofit regulation which is working for traditional financial systems and apply that to the world of crypto. And the other thing is, we honestly need to ask ourselves the question is, why are we regulating this industry? We keep saying we're protecting the consumer, but let's be honest, a lot of the issues in the world of finance are still occurring in traditional finance, whether it's fraud or KYC. And we see traditional banks getting fined every 6 months because they failed to do KYC on some kind of money laundering. So is the traditional regulation, working for traditional finance? If it's not, then why do we want to cut and paste and apply that to some completely new model. So we need to ask ourselves why we're regulating and what are we really doing. And I think the answer of protecting the consumer, at least for me personally, no longer works.
100%. 100%. So it's time to move on to our last segment of the show. This is Free for All. So for this last segment of the show, I've decided to share my power with you and have you ask each other one question each. This is our own way of participating in decentralization. So feel free to go first.
Okay, so I will ask. So you're very involved in the world of DeFi and crypto as we are also. But what's your one bet? Who's the Amazon?
Nice question, Iqbal. Thank you.
And before you answer, could you message me so that I can actually buy the token first? But no, yeah. What's the Amazon for you?
I don't see an Amazon in DeFi because we're seeing a lot of collaboration. So I see a bunch of protocols that I think are going to be here the long term, like Aave, Compound, Yearn, Uniswap, SushiSwap, or all those blue chips. I think they're going to be here, and you see it when a problem happens. When a problem happens, there are devs from all over the protocols helping that single protocol that's having an issue. So I don't see an Amazon because you need all the other protocols. We see that Yearn, you see it in Uniswap, in SushiSwap, in Aave. They need all protocols to work. What could Aave do without MakerDAO that can feed them DAI, for example? So I think there are foundational stones like MakerDAO, for example. They mean DAI, but you also have USDC, you have USDT. I see more like a bunch of protocols, the blue chips, being here for the long term. And I think that right now there are a lot of emerging new primitives, like a lot of options protocols are popping up right now, and a lot of new financial primitives that are going to be here in the long term. And we're going to see them grow really, really, really fast.
Good answer.
Super tricky question. I wanted to ask you about it's not user security, it's more about curation. Do you think we need more curation on what a user can access? And let me expand that question. It's about it's really tightly related to Ledger, because right now when you sign on a device, you are signing an address. That's quite cryptic, actually, for some users. So do we need a walled garden? What do you think we need for users to feel more safe when they are signing a transaction?
So I don't feel we need a walled garden. I being at Ledger, I would not want to be the person to decide what applications somebody could access. I would want to be in a position to ensure that they can access any of those applications securely. And the reason I say this is curation happens by default. If you look at the internet, Google and say they can index whatever, trillions of pages or billions of pages, etc. Human nature, by the way we're designed, we automatically curate the websites we end up going to. So I think the apps which are powerful, which are strong, which are the ones you've mentioned and stand the test of time, will self-curate. People will start referring them and saying, well, this is the one I'm using, this is the one I'm using, and this is the one I'm using. And so they will solidify their positions and the others will fall by the wayside. But I think creating a walled garden and saying, well, we're just going to be looking at these top 10 apps. I think one, we're way, way too early to be doing that. And two, I wouldn't be one to be the judge and jury on something like that. I think all we have to do is educate consumers on the risk that they have. But if they want to access it, give them access in a secure manner, or the most secure manner that we have available today, and let the market curate it itself.
Yeah, that's really nice. I totally agree about education. Yeah,
that's a great way to end it. Education. Gentlemen, it's been a real pleasure chatting with both of you. I'm looking forward to using Yearn and Ledger Live, and maybe having you both again soon for some more news. So thanks a lot.
Thank you.
Thanks, Mo. Thanks, Iqbal. It's been a pleasure.
Cheers, man. Bye.
That's it. If you found this to be interesting, go check Yearn in the discovery section in Ledger Live. And as usual, if you want to explore crypto and NFTs, we've got you covered with Ledger Academy, School of Block, and of course, Down the Rabbit Hole. So be sure to check them all out as well. This was On the Ledger from Paris with your host Mol Said. Till next time, take care. Au revoir. This content is provided for informational purposes only and is the sole expression of our opinion, and should not be relied upon as legal, business, investment, or tax advice. Do your own research. Any loss or profit is your sole responsibility. Stay safe.